right, we have our third episode of the Sunday's watch list. So last week we made a big move with Facebook, moving for over $20 for the week. So this week we're gonna look at what big moves can happen in the market. We're gonna put together our watch list, and I'm gonna give you a little tools and some things to look for whenever you breaking down your charts. All right. So the first company that we breaking down for our Sunday watch list is Macys. So there's a couple reasons. Okay. So we got, for one, we'll have some technicals, but also I think there'll be some fundamentals in there as well. So I can tell you, for the most part, being out this weekend, I see many people out spending that stimulus money, right? So they're spending that stimulus money. All these companies that are value stocks that's been down during COVID are on their way back up. So we have to look at this. Macy's had a down week last week from a high of $21 a share. So if we're looking at this and they're down over $2 a share from the past week, and Macy's is a more slower moving stock, but also I notice a lot of people out spending money, which can be a catalyst that can make Macy's move this week. Okay. Also, if we're breaking down the charts, we look at it, it's kind of started forming a level of resistance and support that's coming. We looking at our, but as well, I've seen a trend that has formed. So we have a trend that's forming, or you can make sure you have both of your trend lines on. And you can have a trend that has been forming, right? So usually you'll see this trend going back and forth, but I think the catalyst of the stimulus has helped us create a level of support, which is going to find an opportunity to bounce through that support. All right. Also, we can look the last hour of the day, we had a lot of bullish volume. So I feel like this is one of these companies where you can see big spikes over times, even though you may think they may be coming back down. You might see another spike back up. This is something I'll get some time for. I'll literally, when I see this break this level of 1886 and cross over this right here, this yellow line, is our 9-day moving average. That is something that we want to make sure we look and add to our charts, the 9-day moving average. And when you see that 9-day moving average, the candlestick gets above that, I can see a breakout going back up into the 20s. Okay, so we have people spending money, spending that stimulus money, and I see this company potentially having a breakout over potentially in the next few, over several days or even a couple weeks. So the next company that I'm pulling out, another company with an M, we got MGM. This is a company from Las Vegas, right? The MGM Grand, all those things. So as we see this, we have this white line is my 26-day moving average. And we kind of see it's been hugging this line a lot. And I see a bounce coming through here and then making its way back up. On Friday, we saw a lot of bullish volume. Yes, the last hour had some bearish volume, but I think this is something that we can see a move back into about 42 or better. I think it's pulled back down, created a level of support as we see. And these contracts, even if you give yourself some time for it to go, because it has already filled this gap. So we like when these gaps get filled because it creates a little bit more stability. So I think it went down to fill this gap. We're creating a level of support. We're building up more bullish volume, as we can see for the week, even though there was down for the week. You can also see we had a lot of bullish volume. So this is a company that has money being poured into for it to make a breakout, make a move. You probably can get you some pretty decent contracts for up into the 41, 42 level for about a couple weeks out. That way you have some good Greeks into going into this contract. So the next company that I'm going to pull out is Yum. All right, so we have Yum Brands. Okay, so this is a company that makes snacks, foods, all that good stuff, right? So I see it's breaking down. create a level of support, and I think I'm gonna see a channel form. But when the channel forms and it breaks this level again, I think we can see a good potential of it getting past 109 up until possibly 110. So this is something where I would set alert because I know we have key levels on, and I'll set alert. And as it comes down, I believe it's going to bounce and it's going to have a potential to come back up and break this resistance level. Okay, so that's a level that you want to see it look like it's bouncing off of this moving average. And then we see all our other moving averages are coming down. That's good if you want to be bullish on this, okay? When you want to be bearish, when you see these moving averages going up and the candlesticks are going below it. So we see that we are going above this moving average. It looks like everything's coming below. We can get a bounce and make a movement up into 110 or 111. We also have a small gap through here, so this may get filled soon or not, but I think we have potential to make this move back up because well, we can know that, more people are out shopping, buying food. So you can see that this had plenty bullish volume and just over the course of the last 2 days when the market was down, which caused this drop. So if we get a green day in the S&P 500, this possibly give it enough volume, enough juice to break that resistance level. Next company I have is Nike. So Nike is creating this wedge pattern that I've seen, and I think it's coming up and down as we see it had a lot of bearish volume at the end of the day. But at the same time, I see it doesn't have a strong fundamentals right here with this long wick. So this wick doesn't give a strong support above. So if it want to build back up, obviously Nike is a respectable brand, but also we said we got catalysts now, right? We have stimulus money coming. We see these moving averages dropping and it's headed down below these candles right here. So we have this weak fundamental with the wick. So it has potential to come up and fill this and potentially create a just create a resistance at this level. So I would want to see a run up to 42. Okay, so we have a $5, $6 move on this and potentially more because I see a strong resistance here. Every time it reached this level, we can see there has been a lot of volume, a lot of movement, and this is a breakout level for Nike. As we look right here, we can get a breakout if we can get past this level. So I would literally set a alert for 140.17. So the current moment we're at 137. So you want to see this volume break out. And if we can see us get above this 200-day moving average, I can see a breakout for us up to that level. So if we get above here, I think we can get this movement above this. So give yourself a week or two for this contract. I'll set alert at this level. If you want to be a little bit more risky, you can set it right around here because if it's breaking this moving average, but we want to make sure we play it safe. So if you paying attention to your charts regularly, yes, potentially we can make that move. But not paying attention to charts, I'll just set this alert. Want to break this level, it'll create create a support level and possibly break through on its way up. The last company that I have for you that I feel like they're making a pretty good move this upcoming week is T-Mobile. Ticker symbol TMUS. So this is something that we've been playing with, and it's been working for us this past week. The last 2 weeks, we have seen this identical, and I said this, you can pull this up on my last two YouTube videos. They all been identical. So this big move for this week, I think, will be T-Mobile for us, right? So T-Mobile had pretty decent contracts, but also we see this large volume right here coming in. And as you look at and we reflect back when I was speaking about Boeing, which made a $50 move, and then we see last week Facebook made over a $20 move. I can see this same setup forming for T-Mobile. So this is something you can pay attention to and even go back and watch those other YouTube videos where we came down and we touched, kissed, or bounced off of this 200-day moving average with volume that's coming. So we see our smaller moving averages are all coming down below. And as we get momentum in this volume, I can see a bounce. So as we coming through, there can possibly be a bounce through here on its way up into 129 or better. So also these contracts don't need to be expensive. You can get you a 31.30 and ride it up until you feel comfortable. So I will literally sit here. I can see this level historically being strong right there. We can see right here it touched, broke through, came back down. So that shows you it touched 3 times at this point. It bounced off of there at a point, touched 4 times here, touched about 3 to 4 times there. So we want to break this level. So when we can get T-Mobile to break this level and make his move up, we can see a nice upward momentum. So this one right here, I say T-Mobile is something that I feel very confident about, that I like. And I want to see this same bounce momentum up past 29 up into 30s. And if there can be a good week with volume and the S&P going up, S&P 500 going up this week for, letting all the bonds and the interest rate ideas just kind of wash away for a few days and focus on people getting back to normal, people spending money, and we have stimulus money being circulated and kind of getting these business back on track. I would see T-Mobile making a nice run too. So this is something that I look for. Especially the setup on our charts looks very favorable going into this. So that is my watch list this week. Go ahead and make sure you always pay attention. This is some things you want to add this week. Make sure you add your volume indicators. That's something that I've been looking into this past week, and I think it's been very helpful. And if you can look at these volume indicators, it can help you with the trends that's developing. It can help you knowing when to exit out of a trade. So volume indicators and your moving averages are things that you want to have. The 200, as we did 2 weeks in a row, is a strong moving average for us to have on our charts. So until next time, follow me, tap in, and let's take flight.